Thanks everyone for coming out and supporting the industry. I know it's been pretty lean for a long time now, and finally things are starting to look a little bit exciting again as things are starting to turn, and it looks like we're in the early days of a bull market. I think most of you are probably somewhat familiar, as Gwen mentioned, with the story, so I'll try to get you up to date on some of the key points here during the next 10 minutes. In terms of management, I think most of you know our team along with our board, so I'm not going to spend too much time on that, other than to say this is the same team that had the Integra Gold project, which was in Val-d'Or, that we took from a 20 million market cap to a sale of 600 million in 17 to El Dorado, with most of the heavy lifting done during the worst bear market on record for the gold sector. So it is a team with a proven track record of being able to advance projects quickly, access capital, and also market extremely hard as well. So that's kind of a little summary on the team. We just recently completed a really quick and dirty financing. We announced a raise of about 8 million about 3 weeks ago. It was kind of the idea from some of our institutional shareholders that now that things are starting to look up in the sector, we don't need to be quite as concerned about preserving capital and running with just one drill. So they wanted to add some more cash so we'd be able to add a few more drills and kind of speed things up, much the same as we used to do at Integra Gold, where it wasn't uncommon for us to drill 60,000 meters a year. So that puts the new capitalization here. As you can see, market cap's around a little over 100 million for the first time, and I'll tell you why that's important as we move through the presentation. But we're at about 90 million shares issued outstanding, and as you can see, that's not an error. There's no warrants outstanding, so it allows the stock to breathe a little bit easier. And when you look at our breakdown of our share ownership, you've got a big chunk of that's institutional, about 60%. Our team's put in well over 2 million of our own money when we got this started a few years back now. And then there's a retail component, and Kinross is also in there as well. Some of the bigger shareholders that you'd recognize would be Pierre Lassonde, Ross Beatty, Eric Sprott, gentlemen like that. And then JP Morgan out of London, Extract Capital, and some of the names that you see on the list there. So we're at the moment well financed well into next year with about 16 million. This is an important slide. It just talks about the scarcity of these types of deposits that are available for the majors and the mid-tiers to look at acquiring to add to their pipeline. There's about 45 deposits worldwide that are 3 million ounces or greater that are in the hands of juniors, and then when you break that down, if you're concerned about geopolitical risk, 29 of those are in top-tier jurisdictions, being Canada, US, and Australia. And then that breaks down more pertinent to us is that there's only 9 in the US, and we're on that list. Going back since we kind of acquired the asset in 17 in the fall and then put out our initial resource of 3.5 million ounces in the inferred category of gold equivalent. That was without us having even put a drill into the ground. So that was essentially a historic resource based on the work Kinross did back in the 90s. So it was a little bit old, and we were at the very right side of this chart, just behind Corvus and GSV. With all the work we've done last year with the drilling and the geological work that we did, we were able to convert that a couple months ago to 3.9 million ounces in the M&I category, and also increase it overall with an additional 500,000 ounces in the inferred category. So we leapfrogged both Corvus and GSV in terms of size of resource. The big glaring difference that you'd look at, especially going back 2-3 months ago when we were about a 60 to 70 million market cap, was both of those peers of ours were sitting in the neighborhood of around 300 million market cap. So one of the big differences when you look at Corvus and us was that we had just a completely inferred resource that was basically historic, and they had a PEA to back up the resource, and they had M&I in the category as well. So we checked off one of those boxes a couple months ago with the conversion that I just mentioned, and that allowed our market cap now to kind of grow to over 100 million. We think that there's a great opportunity for a revaluation of our market cap in the coming months, as we're going to be checking off that second box coming up next week on either Monday or Tuesday. We'll be putting out our PEA. It's our maiden PEA, and we're really expecting that the market's going to be surprised, if not shocked, by how strong the project looks. So please keep an eye out for that next week, and that's where I think we'll be able to start closing the gap. I'm certainly not telling you that next week we're going to be a 300 million market cap company, but we will start to close that gap, I think, in the coming months, especially supported with continued drilling and expansion of the resource and a better market. So most people, including ourselves, have been, largely focused on the low-grade side of the story. Obviously, when you're able to step into a 3.5 million ounce inferred resource of low-grade material, that's kind of a good launching point. So it made a lot of sense for us, but it is important to remind people that not only was there a production period from 77 to 98 that was open pit, and that was only shut down due to low gold prices, and that's why we were able to step in and acquire those ounces right out of the gate. But the other part to consider is that back in the late 1800s to the early 1900s, they were underground mining 30 gram per ton on average gold and also using a 15 gram per ton cutoff. So I think people would be pretty happy with just averaging 15 grams per ton. So we will start to test some of those targets now that we've got some more cash in the till as well. Later this year and probably into Q1 is when you'll see us start to test some of these targets. Idaho, geopolitically speaking, is one of the better spots in the USA. It usually ranks in the top 5 in terms of being mining and exploration friendly. Brad Little, the gentleman in the front there that you see, he's the current governor down there. Butch Otter in the background just basically ran 2 terms, I think, and then stepped down, and Brad was his protege. So I've done marketing along with other companies from Idaho in New York and Toronto with Butch, and he opens up usually the investor day. So what I'm just trying to say here is that they're very mining friendly as long as you kind of follow the rules. This is a disturbed site, much as our Lamaque project was that Eldorado has put into production this year. And it keeps getting better at depth on our old project too, as we thought it might. But so we're permitted on a state level on the patented ground. So once that PEA comes out, we'll be able to apply for a federal permit, and that usually takes 2 to 3 years. So we expect to be shovel ready on the project within about 3 years from now. So a fairly quick timeline on that. Again, just talking a little bit more about the resource estimate, 3.9 million ounces in the M&I category. We were able to convert 90% from the original inferred resource. We went back and basically reassayed and sort of looked at all the old samples again from Kinross's work, and that's what allowed us to be able to convert at such a high rate. And as we move into feasibility studies going forward, likely into next year, that saves us about 200,000 meters of drilling and about $50 million, which helps us to keep the share structure intact as well. So that was a real positive win for us too. Metallurgically, they ran a mill for the open pit period of production there, and as you can see, the recoveries were quite strong. We're looking at a scenario where we've got some optionality here, where the PEA will talk a little bit about a milling scenario that would be supported and initially started off by a heap leach scenario, which is the cheaper option. But historically, as I mentioned, they've had strong recoveries milling there, no problem whether it was oxide, transitional, or sulfide material. We've done some heap leach testing, as you can see there, with some bottle roll tests where we got 83% on the gold, and we ended up at about 40% on the silver. So typically in Western USA, you're looking at 50 to 65% for gold. Anything north of 60 is usually considered to be quite strong. So with those recoveries, we're extremely happy, and you'll see some of that in the PEA next week as well. And then the silver recoveries are pretty much in the average range for Western USA. I won't have time to hit on every slide here, but when you look at Sullivan Gulch, that's pretty much right next door to the lion's share of that resource at Delamar. And we've had a lot of success there with this new zone that we discovered with drilling last year, where we're hitting, a gram to 2.5 grams per ton, over 100 to 250 meters wide. So some really nice intercepts that we've hit there that have allowed us to grow the resource as well. So Florida Mountain and Delamar are separated by about a 5-mile long all-season road that connects the two of them. All of the infrastructure was set up when Kinross was operating there at Delamar, and they basically trucked over ore from the Florida Mountain deposit. So the only thing in terms of infrastructure that we don't have is the mill. It's usually the only thing of value when you decommission projects. We still have the power grid, and we have all their old offices, buildings, and things like that, and shops. We also have the water treatment facility that's currently there as well. So we're pretty infrastructure strong. Just need to look at adding a mill there. So Florida Mountain, I mean, when you look at the heap leach opportunity we have here between the oxide and transitional material, it looks like the transitional material is going to react very well to the heap leach. So at Florida Mountain, that gives us about 75% of the material there will be amenable to heap leaching. And at Delamar, it's about 45%. So last year's drill program was typically more so on the Delamar side. So right now we're just wrapping up a 6,500 meter drill program, and we'll get some results coming out fairly quick. Looks like my time is just about up here. So just to summarize the opportunity I think that we have here with Integra going forward is obviously gold market is going to be a strong gold market that's just kind of starting, is going to be good for all of us, as Gwen mentioned, when some of the generalist money starts to come in. It makes a big difference in our small pool, pardon me. We're adding more drills. We're going to be getting drill results starting to flow again coming up quite soon here. We're also going to be able to start testing some high-grade targets for the first time. And we'll continue to expand the resource. We're about 3 years from being shovel ready. And like I say, I think a big thing here is that now once people see our PEA next week, I think we're going to start to close the gap on our peers in terms of market cap, which is around $200 million right now. So there's certainly some room to grow into that. There's a real scarcity of these types of deposits out there. We've had about 10 corporates up to site in the first year and a half that we've had the project. I wouldn't be surprised to see a strategic investment at some point coming up as well. And one of the other things is we have a really impactful board acquisition, or not board acquisition, but a board member that's going to be joining us, and that'll be announced next week. And then, of course, as I mentioned, the PEA will be out on Monday or Tuesday. I'll be around at the booth all day today if anyone wants to come over and say hi. Thank you.